we are pleased to announce that once again that we have a 2,350 put that closed at $132.60. And I can tell you right now that low is us right here at $66. And if you don't believe it, then come in here and we'll show it to you. And we took out $66. So when you're buying 10 contracts here at 66, you've taken out $66,000. They're down 65, 75. They marked them down quite nice. Could they go a little bit lower? Yeah, but they're awfully deflated. They were $173 per contract here. And with today's up move in the Nasdaq 100, which is this right here, to that current strike price right here. And we got earnings season starting next week and the week after. Notice that it's a February 2350 put. But one of the things that we will say is that we took out all the risk. Not all the risk, but the risk of the day we did, and the risk from the previous 2 weeks, obviously. So we're quite happy with that. This other one that I'll update on the 2300 put that expires, we're in at 15.5. I had bids out there, got to 1503, 1630 by 1660, marked it down from 2405. We sold on the high today of 2750 and got back in on the markdown. And yes, we did. And you probably want to know how we did it. Well, if I were you, I'd get over here and find out. We do have a profit objective at $19.50. And in our system, I put these bids out early in the morning. Yeah, I had to take them down here to get wholesale. Yeah, I had to sell in the high. Yeah, I held them overnight. Yeah, I came out with a profit. Yeah, I got out up here. Yeah, and I'm down at the bottom. That's what this business is about, and we hope to see you here. We feel that every human being should experience this because it is wholesale. Wholesale, wholesale, wholesale. What does wholesale mean? It means that on everything that you buy is wholesale and you sell it back to the public. So if I buy $1 million worth of options and stocks wholesale and I simply sell it back at 0.25%, I'm making 250 grand. No one's going to stop me. That's at 25%. Wholesale, selling back, the buying wholesale. Every trade that we do is, so when these contracts are being bought, and you're buying 5 contracts and you're saving $10, you're saving $5,000 in your entry. And that ultimately, as it ticks back up, and we do get a reversals because we're, top-ended heavy. We're, Nasdaq has done well. But once again, it's all about that wholesale bid. It's all about selling on that high. It's all about making that market and selling that back to the public. It's all about learning how to trade the Nasdaq 100, S&P 500. Lots of other sectors and indices. How to balance risk on entry. I'm very proud of this entry at the moment because it's a good one. And it's wholesale. And we look for these kinds of bargains all the time to make markets with. And one of the things, that's what we're doing here with the Nasdaq 100. And there are various different strike prices and techniques within indexes. And the other thing that we're going to be doing today in a separate video is I will be going and buying for, this is called the VIX, called the Volatility Index, and it's at its all-time levels. And I get to go up here, and when the fear level is lower, everyone's out. No fear. Everything's just wonderful. I will get to buy in February VIX. So when the VIX goes higher, and I got the VIX calls to protect myself, is that when we do have that pullback and that correction, that will happen during the earnings season in a couple of weeks. And I see that earnings season will have to be adjusted and bring estimates down. And I could see where today in the retailers that they too were brought down. But then once again, it's about me getting that discounted premium that everyone was buying protection. You can see all the open interest here. Look at it. Look at these open interests here. $30 call right here is what I will be buying. And there are 13,000 of them traded today, and I will be happy to tell the MMT that everybody needs a little bit of the deflated. So remember when the fear indicators, these were really inflated up here. They were inflated up over here. Back on 10.4, they were 878. People had to pay a lot of money up here for protection in their portfolios with the big ones. But SMF, market makers in the sky, once again, we will put these trades at the all-time wholesale level on the VIX fear indicator $30 call. It has been written and said and put in stone today that the previous day's high was 215, and on the low today is $1.58. And our bids stand at $1.10 on 100 contracts at $1.10 times 10. We'll eventually have about 1,000 of up and out of the money volatility. Because why? I'll show you why. I'll show you why. That I get to buy protection at a cheap discounted rate. Because I did not fight the trend, and I was on the opposite side of the VIX. But now it's time for me to get net long in February, $30 call. Now, having said all of that, one of the things that I would clearly like to point out to people on that VIX.X trade, when I look at the daily chart here, I can see where complacency is. I can see low volume markets in the first calendar 3 days of the year, and I can see that there is very, very little fear. There was no fear down here, but look at that fear indicator, just went all day. And we see that happening again this year. And basically when you're down here, and there's more room, there's always a little room, but the thing about it is we're going to have to deal with the earnings season, and the VIX is that complacency at 20. What does that mean? When you get to these levels, and I did it in 2011, every year for years, but we did it, and we have it. And you're going to have a correction because you're going to have to take earnings down. And the lower that this goes, that means that people are getting all in the marketplace. There is no fear. The least amount of fear, that means that forward looking around the corner, just like we said in 2011. Go back there and watch those shorts on the S&P and the Nasdaq 100 that paid well. In April, end of April, stock market correction around the corner. May of 2011, all the live videos are there. That was the time to be long these calls at a discounted price. And that was over here back in these times. And now, with the small little volume rally and, starting the new calendar year, and you don't have that many bulls really, but you got light volume up in here, and you mark them up to do what? You mark them up to sell them. I will do my purchasing, and I will own these at the lowest price level on these contracts on up and out of the money to manage risk at a discounted premium. My risk is going to cost me down here. And everybody else that put risks on was paying $5 up here. I get to buy protection, $4 lower than what they paid up. They paid up for protection. I get to buy protection at the discounted price. I get to buy that $30 call on the VIX. So when we do have a correction and the VIX goes screaming higher, these calls will go screaming higher at my discounted rate. My wholesale entry to protect my big positions.